were a little concerned going into TMT earnings last week. Frankly, they put up solid results, and that got the market higher. So I think by and large, we're getting what you would call a pretty solid quarter, like a modest beat on revenue, solid beat on EPS, and the biggest stocks in the market are delivering. So, I think that's gotten people fairly comfortable after what I mentioned was a little bit of a wobble kind of coming into the season.
This came up at the dining room table last night.
Really?
Shake Shack catered. It was great. Afterthought picked out the food. Stuart Kaiser came up at the dining room table, which is how partitioned is this market. My basic take is forget about Magnificent 7, the Magnificent 20 are ever separate from the other 400x number on the SPX.
Yeah, I think that's right. Tom, we've been sort of in this broadening theme. The problem with the broadening theme for us has been it doesn't work in two conditions. One, when you have risk rising, and two, frankly, during earnings. Because the fact is your Microsofts, your Apples, your Amazons, your Googles are just putting up huge numbers. And it's very hard to get the market to broaden out.
Okay, but how do you use your theory in textbooks? Somebody had out a summary of the net new revenue of the three major cloud companies. We've never imagined those numbers before. So then how do you do your day-to-day work? How odd this tech juggernaut is.
Yeah, I mean, look, it harkens back a little bit to the late 90s when you were basically introducing a new technology into the system, and you assumed and forecast really large revenue growth, but you were a little uncertain about, both the size and timing of it. So I think what you're having is, to your point, people are compartmentalizing a little bit, right? Like, I need to have some AI exposure on. Let me choose the way to do that. And then off to the side of that, I kind of need to model the rest of the market, as a little bit independently. So it is a challenge, but it's a good challenge to have, right? I think it's a good challenge to have that you have this large thematic revenue growth impulse kind of coming through the system. And look, this is why, we've kind of joked the NVIDIA earnings report in late May is priced as big an event as payrolls on Friday. So to your point, it just knocks
Say
home.
That again. That's important. Say that again.
So if you look at S&P 500 options, they're pricing as much risk into the NVIDIA earnings print as they are into payrolls this Friday. So to your point, this not only is it a big theme, it's also an uncertain theme, and even at the S&P level, that risk is being priced very aggressively.
So Tom's been long the Magnificent Seven. I mean, he doesn't even come into work many these days. He's planning his trips to Paris and everything. The rest of us, though, what do we do? I mean, do I look at energy? Do I look at healthcare? What are the smart people at Citi saying these days?
Yeah, I think there's a couple sectors people are kind of sniffing around. One is healthcare because healthcare underperformed so much last year, and you also have the GLP-1 story, which is not quite an AI theme, but is sort of in the same general sort of category as that. I think industrials is a big focus right now, just because of the IRA spending that's coming through the system that's just hitting company revenues right now, and some of the reshoring story kind of falls into there as well. So I think industrials and healthcare are two big areas of focus for a lot of clients. It's not just by the sector. You're choosing stocks and subsectors, but those are very important.